So, our topic for today on your Tax 101 is Introduction to Business Tax. So, in Tax 101, we will learn about business and transfer taxes. Okay? So, in Tax 101, we will learn about business and transfer taxes. So, Tax 101 deals about your transfer. Okay? So taxation on your transfer. So generally, a business tax is a tax on an onerous transfer, while a transfer tax is a tax on a gratuitous transfer. So when we say onerous transfer, there is a consideration on the transfer. So normally that is a sale. That is a sale. Now, in your transfer tax, it is a taxation on your gratuitous transfers. When we say gratuitous transfers, there is no consideration on the transfer. And on your business tax, we will learn three different taxes. We will learn value-added tax, percentage tax, and your excise tax. While in your gratuitous transfer, we have two types of taxes. We have your estate tax and your donor's tax. So generally, Tax 101 dwells on these different types of taxes. We will deal on your value-added tax. We will dwell on your percentage tax, estate tax, excise tax, and your donor's tax. For midterms, we will start first in discussing your business taxation. So we will dwell on these three types of taxes. And on your final term, we will dwell on your gratuitous transfers, such as your estate and your dollars. Okay, so for today, we will discuss your business tax. So we will introduce business tax. So our intended learning outcomes, first, we will define your business tax. We will know the nature of a business tax. We will discuss your different business taxpayers and your business activities and their taxation. Let's start first, of course, with the definition of a consumption tax. So what is a consumption tax? It is a tax levied on consumption with spending on goods and services. So it is levied on the spending on goods or services. Remember, I told you whenever we talk about your consumption or your business taxes, we talk about your gratuitous transfers or your sales. So whenever we talk about your sale, that is either a sale of your goods or a sale of your service. So later, you will learn that on your taxation of your business activities, generally, we will look only on these two types, goods or services, and how will we tax them. So what is the rationale on your consumption tax? First is your savings formation. So what does your savings formation mean? So why do we pass a consumption tax? The first rationale is your savings formation. Under your savings formation, it tries to limit the level of consumption, which creates savings. So from this word alone or from this phrase alone, we need to form savings or we create savings. So how does your consumption tax create savings? It creates savings by limiting the level of consumption. Remember, in your economics, you have your income less your expenses will give you your savings. Your expenses are in the form of your consumption. So if ever you have a consumption tax, it will try to limit your consumption. Because again, here, if we have a consumption tax, it increases the cost of your consumption. By increasing the cost of your consumption, what happens is that maybe the buyer will not create or make another consumption. So by that, we will limit the consumption if our consumption is limited or our expenses is limited, therefore we have a lower expenses, our savings will increase. So a consumption tax helps in creating or forming additional savings. Next rationale of your consumption tax is your benefit received theory. Okay, so remember in your income taxation, what theory applies? It is your ability to pay. So based on your income, you pay tax. Here, based on what you receive, you pay tax. So based on your benefit received, you pay tax. So all are taxable because everyone consumes, because everyone spends on goods or services. So everyone also receives a benefit, so everyone is taxed. That's one rationale of your consumption tax. And last rationale of your consumption tax is your wealth redistribution. So what about wealth redistribution? So in your wealth redistribution theory, remember that wealthy or those who have more are taxed more. Since they are taxed more, your wealth will be redistributed kasi nga, di ba? If you are wealthy, you are taxed more. If you are taxed more, it means this will lessen your wealth. If you are not wealthy, you are taxed less. So if you have less, you are taxed less. If you are taxed less, it means you have more savings. More savings. You are taxed more, you have less savings. By this, you will redistribute the wealth because here you have now more savings. Here you have your less savings. By then, you can redistribute whatever savings they have, and you can also redistribute the wealth. Okay, so again, the wealthy are taxed more, having more consumption. Those who have less are taxed less because they have less consumption. Less consumption, more savings. More consumption, less savings. Okay, so that is your consumption tax. We go now to your destination principle as a particular topic for us to know how to tax our consumption or how will we levy your business tax. So have here your destination principle. So what is your destination principle? So only those goods or services that is destined or consumed in the Philippines are taxed. Actually, this destination principle is likened to your territoriality. So remember, in your income taxation, you have your territoriality principle that we will only tax those income that are earned within the territory. Okay. Now, in your business tax, we have your destination principle. So we have here your goods or services that are consumed in the Philippines are taxed. So this will help us know which business or which consumption will be taxed here in the Philippines. Therefore, just like your income taxation, not all income are taxed based on territoriality principle. Here, in your destination principle, not all consumption are taxed because only those within the Philippines are taxed. Therefore, this destination principle provides us two main categories of taxation of your consumption. That is either a taxable consumption or an exempt or non-taxable consumption. So our main problem now under your destination principle is when can we categorize a particular consumption as a taxable consumption or as an exempt or non-taxable consumption? We start first with your taxable consumption. Under destination principle, we can say that the consumption is taxable consumption if ever we have a domestic sale or an importation. Okay. In a domestic sale, the buyer is in the Philippines and the seller is in the Philippines. A domestic sale happens if the buyer and the seller are both in the Philippines. How about an importation? An importation happens if the buyer is from the Philippines and the seller is from a foreign country or a foreign destination. So under your taxable consumption, we learned that all those buyers who are in the Philippines are taxable. All buyers who are from the Philippines are taxable based on your destination principle. Again, on your taxable consumption, we have two. First, we have a domestic sale, and the second is an importation. So when is there a domestic sale? There is a domestic sale if ever the buyer and the seller are both from the Philippines. Importation if the buyer is from the Philippines and the seller is from a foreign destination or a foreign country. So what is the common what is the common factor between your taxable consumptions? Both buyers are from the Philippines. Therefore, under your destination principle, a consumption is taxable so long as the buyer is within the Philippines. So we do not look as to our seller, we look as to our buyer. Because who consumes? It is the buyer. Take note of that. The one who consumes is the buyer, it is not the seller. Therefore, in your destination principle, take note, only the buyers within the Philippines are taxable. Next, we have your exempt or non-taxable consumption. When can we say that we have an exempt or non-taxable consumption? So again, we look into the buyer. Only if the are only if the buyers are foreign citizens or foreign entities, they are non-taxable. So, sir, when do we have a exempt? When do we have an exempt or non-taxable consumption? We have an exempt or non-taxable consumption if ever, guys, that is an export sale. Okay? So here, our buyer is a foreign entity or individual, and our seller is a Philippine citizen or a Philippine entity or individual. Okay, so again, consumption. Who consumes? It is the buyer. Therefore, under your destination principle, we need to look on your buyer, whether the buyer is a citizen of the Philippines or not, so that we know whether that particular consumption will be taxed on the Philippine taxes as to our business taxes. So this is like your tax situs on your income taxation. So here in your business taxation, we look as to our buyer. We said we tax the consumption if ever our buyers are from the Philippines. And then we have an exempt or non-taxable consumption if our buyers are foreign individuals, entities, or whatnot. So long as our buyers are foreign, it is exempt or non-taxable. Our buyers are within the Philippines, it is taxable. So this is important factor in determining whether your particular transaction as to your business is taxable or not. Okay, you go now to your business tax. Business tax is a tax imposed when the seller is a business. Grabe, ang ganda naman nung definition niya. It's sometimes called a transaction tax. So generally, for us to learn if ever our tax is subject to business tax or if ever we are taxed on a business tax, we need to know whether we are engaged in business or not. But this one we will discuss later. So a business tax is also an excise tax imposed on your onerous transfer. So we go back to our definition a while back. So we have a business tax because of your onerous transfer of goods, properties, or services done in the course of business. So take note, we will impose business tax in case we are engaged in business. Later, we will learn when we are engaged in business. But a while back in our introduction, we have already said that we have a business tax based on our onerous transfer. So whatever transfer of goods, services, or properties, so long as it is done onerously and in the course of business, it is subject to business tax. Take note, guys, that maybe you are now asking yourself, how about your capital gains taxes? How about the ordinary and your uh, your sales under your gains and dealings in properties? Why are they not subject to business tax? So they are not subject to business tax primarily because they are not done in the course of business. So one thing that you need to look here in your business tax is whether it is within the definition of your business or not. If it's not within the definition of business, it is not subject to business tax. But if it's within the definition of business, then it is subject to business tax. So again, we go back. In your income tax before, you have your different gains or dealings. So we have your capital gains, you have your dealings in property, we have your ordinary gains, your short-term or long-term gains. So those gains or dealings, although it is done onerously, meaning there is a consideration on your transfer, it does not meet the definition of a business tax because those items are not done in the course of business. However, here in your business tax, if ever that particular selling of property is made in the course of business, then it is subject to business tax. Okay, so let's take a look in your CGT. So in your CGT of a real property, capital gains tax on a real property that is subject to 6% CGT plus 1.5% DST. Now here, in your CGT of real property, if ever that is an individual who just sold his or her real property and he or she made a constructive gain on that particular property, it is subject to CGT. Okay? So that is an isolated transaction. But if ever you are a real estate business and you keep on selling real property as an ordinary course of your business, that will not be subject to CGT already, but subject to business tax because it is now done in the course of business. So again, what is the main difference between the taxation of an onerous transfer in between an income tax and a business tax? Because in income tax that is not made in the course of business, if that is an onerous transfer, while in a business tax, it is done in the course of business. So we go now into your nature of a business tax. So what are the nature of business tax? So the following are the natures or the nature of a business tax. First, it is an indirect tax. So what is again an indirect tax? An indirect tax happens if ever the impact and the impact of taxation falls differently from those who has its incidence. Okay? So the impact of taxation falls differently from its incidence. So unlike an income tax is a direct tax. The impact of taxation is the individual or the corporation or the partnership, and that is the main person who will also pay the tax. But here, in your business tax, the impact and incidence is different. So the impact of taxation is the business itself, but the incidence is passed on to another person. So, for example, in EVAT, so if ever you have here a selling price of 1,200 pesos, this 1,200 pesos is already inclusive of VAT. Okay, it is inclusive of VAT. Since it is inclusive of VAT, although the VAT should be paid by the seller, but since you have already topped it up, so it is already topped up in your price, hence you already have here your actual price and the additional VAT. Okay, so the selling price, you already top up the VAT. So the selling price consists of your actual price, which is the price you normally sell that good, plus the VAT. So here, although the seller should pay the VAT, you pass it on to the buyer. So although the impact is on the seller, the incidence is on the buyer because the one who is paying the VAT actually is the buyer, not the seller, because it is now in the form of an indirect tax. Indirect tax. So actually, who pays it? The buyer, but who should be taxed? It is the seller. So business tax is an indirect tax because the impact and incidence does not fall into one person, entity, or individual. Next, we have your privilege tax. So why do we consider it as a privilege tax? It is a privilege tax because you have the privilege to do business. You have the privilege to do business. And because of your privilege of doing business, you are taxed. So privilege tax. Normally, the other term here is the excise tax. The performance of a privilege, an occupation, or a business. Remember that as an item of your different taxes before. So privilege tax is also known as your excise tax. The performance of a particular privilege, business, or occupation. So privilege tax. Next, it is a national tax. So why is business tax considered a national tax? It is considered a national tax because, guys, a business tax is levied by your national government. Okay? So since it is levied by the national government, it is considered a national tax. If ever it is levied by the local government units, it is called a local tax. But a business tax is levied by the national government. So what are the nature of business taxes? First, indirect tax, because the impact and incidence of taxation differs. Next, you have your privilege tax because it is a tax on the performance of a privilege of doing business. And third one, it is a national tax because it is levied by your national government. So what is again the definition of a business tax? It is a tax on the onerous transfer of your goods or services made in the ordinary course of business. So take note, one important thing that you need to consider here in your business tax is whether or not that particular transfer is made in the course of business. Because if, again, it is not made in the course of business, therefore, we should not tax it on a business tax. But if it's made in the course of business, then we tax it on a business tax. Okay? So types of business tax. So we already know what is a business tax. So it is based on your onerous transfer of your goods or services made in the ordinary course of business. So what are the types of business tax or your consumption taxes? So I have three main types of consumption or business taxes. We have your percentage tax, we have your value added tax, and we have your excise tax. Okay, so remember your income taxation. Under your income taxation, you have your tax schemes. Okay, we have your tax schemes. So what are those tax schemes again? You are either taxed at a final tax or you are taxed at a regular income tax. That is the only tax scheme under your income taxation. So either final tax or regular income tax. Now, under this tax scheme, if it's ever taxed at final tax, then you go to regular. If it is taxed at final tax, final tax. If not, go to regular income taxes. So you have your different types of income, subject first to final tax and then regular income tax. What is nice under income taxation is that every type of income normally have a final tax part and a regular income tax part. So for example, we have your gains or dealings. So what are under your final tax again? Your CGT. What is under your regular income tax? So those are your long-term and your short-term gain. What else? For your business or professional income, what is under your final tax if you opt under 8%? And then we have your regular income tax if you do not opt on your 8% tax. We also have under your compensation income. So what item of your compensation is subject to final tax? We have your fringe benefit tax. And what item of your compensation income is subject to regular income tax? That is your other compensation income, not considered as fringe benefit. Okay, so under your income tax, your tax schemes are final tax, regular income tax. Now, in your business tax, although these are types of consumption taxes or business taxes, I tell you that this is also the tax scheme of your business taxes. This is also your tax scheme of a business taxes. So generally in your income tax, again, we have your exempt income and then we learn whether it is subject to final tax or regular income tax. Also in your business tax, what do? We know first on your exempt, we know first your exempt transactions. So what are these exempt transactions? Meaning these are the transactions not subject to business tax. So these are transactions not subject to business tax. So again, we go back on your tax scheme. So remember, we have a tax scheme in your income taxation. Also in a business tax, we have a tax scheme. Although in the form of your types of your business taxes, but still we can say it is a tax scheme. So again, we go first on your business tax, whether it is not subject to business tax or not. So we say it is not subject to business tax if that is an exempt transaction. Now, if ever that is a non-exempt transaction, meaning it is considered as a taxable transaction, we either tax it at value-added tax or percentage tax. When do we consider that particular transaction subject to value-added tax? The first is that if ever that business entity has a total income of more than 3 million pesos. So if ever you have already met the VAT threshold. Okay, so what is the VAT threshold, sir? The VAT threshold is the 3 million pesos. If your annual income is 3 million pesos, if your business entity is more than 3 million, your income is 3 million pesos, then you should be registered as VAT. Another is you are only VAT registered. You are only VAT registered whether or not you met the VAT threshold. Okay? So you're VAT registered again. If ever you register as a VAT taxpayer, even if you did not meet or you meet the VAT threshold. Okay, so again, if you learn that the transaction is not an exempt transaction, it means it is taxable. So how do we tax it? VAT first. We can say it is VAT if ever the business entity met the VAT threshold, that is 3 million pesos in the last 12-month period. And then either the business entity is a VAT registered entity, meaning whether or not you meet the VAT threshold, you already register as VAT taxpayer. So you will pay VAT. So you will pay 12% VAT. Output VAT less input VAT. Okay. So again, if you have a taxable transaction, you can be subject either to VAT if you have these two items, or you are subject to percentage tax. If you are non-VAT, meaning if you are non-VAT, you did not meet the 3 million threshold and you are not VAT registered. Okay? And then you have your certain transactions subject to percentage tax. Okay? So these are different transactions or different business entities that are actually subject to percentage tax. So we will learn soon what are these different entities or business transactions subject to percentage tax. Okay, we go back to the tax scheme or the taxation under business tax. So your business tax happens based on your consumption. And then to know whether we will tax you at a business tax, we need to learn whether that is an exempt transaction or a taxable transaction. When can we learn that it is an exempt transaction? If it's not subject to business tax based under our law or under our train law. that is under Section 109, I think, or Section 105 of the NIRC. And then, if ever it is taxable, then you go whether it is taxed at VAT or a percentage tax. The question is, when do we subject it to VAT and when do we subject it to percentage tax? We subject it to VAT if ever the business entity for the past 12 months met the VAT threshold. And what is the VAT threshold? At least or exceeding 3 million, I think exceeding 3 million pesos. And then another is you are subject to VAT if you are VAT registered. Whether or not you met the VAT threshold, if you are VAT registered, you are subject to VAT. Now, what if you are not subject to VAT? Then you are now subject to percentage tax. Okay, so when are you subject to percentage tax? First, if you are non-VAT taxpayer. Next, if there are certain transactions that is covered under the law that is subject to percentage tax. So again, tax scheme, VAT. If hindi siya pasok sa VAT, papasok siya sa percentage tax so long as it is taxable. Sir, saan papasok naman ngayon yung excise tax? So there is an excise tax, guys, in case you have an ad valorem tax. Sir, why do we say it is an ad valorem tax? Take note, guys, it is not included under your tax scheme. So your tax scheme is either VAT lang. Pag hindi siya VAT, edi percentage tax. Eh ngayon, saan yung excise tax? We say it is ad valorem. What do we mean by ad valorem? When we say ad valorem, it adds to the value of your particular tax. So instead of having VAT or percentage tax, it's either VAT plus excise tax, percentage tax plus excise tax, because it is considered ad valorem. So in short, it is imposed in addition to VAT or percentage tax. So you are already taxed into VAT or percentage tax, but in addition to that, you are taxed at excise tax. Okay, so that is your excise tax as part of your consumption or business tax. So again, general rule, if that is a taxable transaction, you will tax it either at VAT or percentage tax. Plus, you can have excise tax. So these are only certain percentages imposed in addition to VAT or percentage tax. As early as now, I'm telling you, not all VAT transactions, not all percentage tax transactions has an excise tax. Only those certain items have an excise tax. Okay? So not all has excise tax. You will only add value to your VAT or percentage tax if ever that particular product is excisable. Excisable product, excise tax, subject to excise tax, excisable product. Okay, so if ever the product is subject to excise tax. Okay, so in this particular slide, what did we learn? We learned that just like your income tax, we have your tax scheme. So in your income tax, again, if it is subject to final tax, then that is the tax already. If not, go to regular income tax. How about in a business tax? What is the tax scheme? If it's subject to VAT, go to VAT. If not, go to percentage tax. Okay? So as early as now, please know the tax scheme of your different consumption. So it can either be subject to VAT or percentage tax. Okay? How about excise tax? It is only imposed in addition to VAT or percentage tax. It is ad valorem. So we talked too much already of your business tax and the types of your business tax, but we did not yet discuss what is a business. So we said a while back in your business taxation or your business that it must be done in the ordinary course of business. And what is the ordinary course of business? So business or in the course of business means the regular conduct or pursuit of a commercial or economic activity, including transactions incidental thereto by any person or government entity. So please do not end in your definition as to your commercial or economic activity. You must end it until you're including transactions incidental thereto. So even if that is not your main transaction, if it is incidental to your business, you still tax it under your business tax. Okay? So take note, whether it is a person or a government entity, if ever you are undergoing trade or business in the pursuit of a commercial or economic activity, you can be subject to business tax. Okay, so looking into this definition, we have these two requisites. First, there should be regularity in the activity. Why? Because again, in your definition, it is a regular conduct. It is a regular conduct. So there must be regularity in the activity. When we talk about regularity, it means that there must be a habitual engagement or activity of the business. It means more than one isolated transaction. It requires repetition or continuity. Okay? So it must not be only an isolated transaction. It is habitual. It is habitual. So for example, in our case scenario a while back, we have here a lot. If that is an isolated transaction, minsan mo lang ginawa yan, it is subject to CGT because you are not in the course of business. But if you are normally in trade of your buy and sell of real estate or residential lot or lot itself, then you are subject to business tax because you have more than one isolated transaction and it is repetitive and continuous. Okay? So there must be a regularity in your activity. But that is the general rule. That is the general rule. Now the question is, what is the exception to the rule on your regularity in the activity? So our rule is, if there is a repetition, habituality, or continuity of service or the course of trade, then it is subject to business tax and it is considered a business. But what if that is only an isolated transaction? Our question now is whether an isolated transaction can be considered as undergoing business, therefore subject to business tax. Because we said only those in the performance of your regularity of activity or those habitual activity is subject to business tax because it is considered a business. But what if it is only an isolated transaction? Is it subject to business? Yes, it can be subject to business tax because it can be considered as a business. So what are these isolated transactions that is considered as an exemption to the rule on your regularity? The first one is your services rendered in the Philippines by your non-resident. So those services rendered by non-resident in the Philippines. So although it is rendered by a non-resident or it is done only once, so long as there is a commercial activity or a business activity done within the Philippines, it's still subject to business tax. It's still subject to business tax. So here kasi, tandaan, it is a non-resident. So kahit minsanan lang yung transaction niya dito sa Pilipinas, basta engage na ng business yung non-resident pa, dati pa, kahit ginawa lang minsan dito sa Pilipinas, it's still tax on a business tax. Okay? So, take note in your presumption of regularity, of course, we can only presume regularity of transactions within the Philippines. Here kasi we have a non-resident. We cannot presume regularity of business of that non-resident because we don't have any record of it here in the Philippines. However, if that transaction is considered of a commercial activity or economic activity and it is rendered by a non-resident, although it is an isolated transaction, it is subject to business tax. Dito kasi yung seller, hindi natin maprepresume na meron siyang regular or habitual engagement in business. Another exception to the rule are your isolated transactions that can be subject to VAT. So what are these isolated transactions that can be subject to VAT? So example is your importation of goods or services, whether engaged or not. So importation of goods or services, whether or not engaged in business. So even if you are not engaged in business, so long as you import goods, take note under your importation, we said a while back that it is an item of your consumption so long as you import. So here we have an importation of goods, whether or not you are engaged in business, even if that is an isolated transaction, we still tax it on a business tax. So that's one requisite of your business: regular conduct or regularity or habituality or continuity. Another requisite is that the activity should be commercial or economic activity. So what do we mean by commercial or economic activity? We say it is a commercial or economic activity if ever the purpose is for profit or to earn an income. The activity is considered commercial or economic if the purpose is for profit or to earn an income. So the general rule is that any commercial or economic activity is considered part of your business tax. What are the exemption to the rule? So here, pag sinabi natin exemption, even if it is not commercial or an economic activity, it is still subject to business tax. So what are the exemption? The first exemption is the importation for personal use. Take note, this one is for personal use, but since it is an importation, it's still subject to business tax. Okay? So personal use siya, hindi for commercial or economic activity, but still subject to business tax. Another, we have your overseas communication. So your overseas communication under the law is subject to percentage tax. Why do we say that your overseas communication is an exemption to this rule? Because the overseas communication, whether or not it is for commercial or economic activity, so long as there is an overseas communication, it is subject to business tax, and that is your percentage tax. Okay, again, what is the general rule? The general rule is that if ever it is a commercial or economic activity, meaning for the purpose of earning profit or income, it is subject to business tax. What is the exemption to this rule? That even if it is not a commercial or economic activity, it can be still subject to business tax. And what are those? First, you have your importation for personal use. Because even if it is for personal use, meaning not for commercial or economic activity, because of the nature of the transaction as an importation, it is subject to business tax. Take note, the rule in your consumption on your destination principle. Next, you have your overseas communication tax or overseas communications. So in your overseas communications, so long as you have an overseas communication, whether or not it is for profit or for income, or it is a commercial or economic activity, so long as there is an overseas communication, it is still subject to business tax, particularly percentage tax. Okay, we go back to the rules we learned here in this particular slide. We said that your business is present if these requisites are also present. First, there should be regularity in the activity, meaning habitual engagement or a continuity in your service. That is the general rule. What is the exemption to the rule? The exemption to this rule that even if there is only one isolated transaction, it is still considered as a business, therefore subject to business tax. And what are those? First, if there is a service rendered by a non-resident in the Philippines. What we presume here is the economic activity, even if the non-resident is not presumed as doing business. The second one here is your isolated transactions, such as your importation of goods, whether or not you are engaged in business. Importation of goods, whether or not you are engaged in business. Another requisite, we have your activity should be commercial or economic. The activity is considered commercial or economic if ever the purpose is for profit or to earn an income. The exemption to this rule is that if ever that is not commercial or economic, we still subject it to business tax. And those are your importation for personal use and your overseas communication. Okay? So let's go back to all the rules that we have learned already. So we already learned your consumption tax. And under your consumption tax, we have this so-called destination principle, wherein we only tax if ever the buyer is in the Philippines. And that is your domestic sales and your importation. That is already an important rule, that you can only tax a business if ever the buyer is in the Philippines, domestic sale, or importation. Now, we have here your business tax. When do we consider a particular entity subject to business tax? If ever you are engaged in the ordinary course of business, and the requisites are, first, we have your regularity in the activity or habituality in the activity. Next, there is a commercial or economic activity. And once you know that you are subject to a business tax, you can be taxed on these three items. But actually, we said we only have two tax schemes. That is your VAT, if ever you meet the threshold that is exceeding 3 million, or you are VAT registered, or if not, then you are subject to OPT. Again, if you are subject to VAT, VAT na. Pag hindi, dun ka lang papasok sa other percentage tax. So when are you subject to OPT again? You are subject to OPT if you are non-VAT registered, and also you have transactions that is specifically subject to percentage tax. And aside from paying this type of business taxes, you have an add-on tax. We call that your excise tax, because this is considered an ad valorem taxes. Okay? So far, I hope we are still clear as to these different topics. We go now to your business taxpayers. So we already know when to consider an individual or an entity as doing business and how do we tax them. We go now to your different taxpayers. We go now to your different taxpayers. So when do we consider a particular individual or entity as a taxpayer? So if as a business taxpayer, we consider that individual or entity as a business taxpayer if the taxpayer is engaged in business, of course. So long as the taxpayer is engaged in business, you consider it as a business taxpayer. When do we consider again as an individual or entity engaged in business? You go back to the definition of a business. That is your regularity in activity, and the activity should be commercial or economic in nature. So in a business taxpayer, we have the following rules so that you learn when to include that particular income or not, or that particular business receipts or sales. So the following are the rules. First, an individual with separate sole proprietorship businesses is taxable as one entity. So this is your original entity. Okay, so let's say you have 100,000 sales. And then we have here your business one and business two. So let's say 500,000 and 300,000 naman yan. So how much is the total sales or receipts? Sir, bakit sales or receipts na yung hinahanap natin? Because again, you are a seller of goods or services. If that is a good, we call it sales. Services generally is a receipt. So you have your sales of receipts, original business mo, 100,000. Another business, business one, 500,000. Another business, business two, 300,000. So how much is the total amount of sales or receipts that should be placed in your business tax? So take note, an individual with separate sole proprietorship businesses is taxable as one entity. Therefore, even if may original ka na sole proprietorship, tapos may another business ka, business 1, may another business ka, business 2. Paano natin itatax yan? As one daw. So how much is the total sales or receipts niya? 100 plus 500 plus 300, 900,000 pesos. Okay? That is one rule. Another rule, a home office and its branch are considered one business entity. Home office and its branch are considered one business entity. So in our example, the original is the home office, B1 is branch 1, B2 is branch 2. So, sir, what is a home office and a branch? So, generally, this happens if ever the business entity has its main office, let's say in Manila, and decided to branch out in the different parts of the country. So, let's say in Baguio, in Visayas, in Mindanao, on other parts of Luzon. So, there is a main office, and you decide to branch out on the different areas. So those branching out offices are called branch. So the main office is considered the home office, and those different businesses outside the main office are considered branch. So the home office and the branch is considered one business entity. So in the purpose or for the purpose of filing its business tax, we need to consolidate the total sales or receipts. So in this case, if we have our home office at 100,000, business 1 as the branch 1, business 2 as the branch 2, we will consolidate it again. So how much is the total sales or receipts? Our answer is 900,000 pesos. And the third rule as to a business taxpayer, a parent and a subsidiary are considered separate business entity. What is a parent and what is a subsidiary? A parent is an entity that controls another business entity. So it is an entity which controls another business entity. And the subsidiary are the business entities controlled by the parent. So for example, we have here uh, the original or the home office is considered now the parent. The branch 1, branch 2, or business 1, business 2 is considered the subsidiaries. So in short, the parent controls subsidiary 1 and subsidiary 2. Sir, when can we say that the parent controls subsidiary 1 and subsidiary 2? Remember your equity investments. If you have at least or more than 50% ownership, you have the presence of control. So if you control subsidiary 1 and subsidiary 2 because you have 50% ownership, you are considered the parent. And these are considered subsidiary 2. So business 1 and business 2 are considered subsidiaries. The one who controls considered parent, and the one being controlled is considered as a subsidiary. Okay? So we have here subsidiaries. What is the rule on your parent and subsidiary? They are considered separate business entity. Therefore, you will tax it separately. So unlike in your individual, we total the gross receipts. Unlike in your home office and its branch, we total the gross receipts. But in a parent-subsidiary relationship, for your parent, you declare 100,000. Parent, how much? You declare 100,000. For your subsidiary, which is business 1, how much will you declare? You will declare 500,000. For your subsidiary, another business 2, how much will you declare? You will declare 300,000. Okay? So those are the rules in your business taxpayers in case we need to look as to our total gross sales or receipts. So individual and other sole proprietorship business, you add it up. Home office and branch, you add it up. Parent and subsidiary, you separate each. So for parent, 100. Subsidiary, business 1, 500,000. Subsidiary, business 2, 300,000 pesos. Okay? That is for your business taxpayers. And for our last topic, we discuss your business activities. We discuss your business activities. Okay? So we already know what is a business, when do we tax that particular business, and who are your business taxpayers, and what do we consider as item of their business tax. And now we go to your business activities. A while back, I already told you that we have two main activities. We have your sale of goods and we have your sale of services. So under these business activities, we need to learn how much should we declare as part of our sales or receipts. As part of our sales or receipts. So our business activities, generally goods or properties, sale of goods or properties. Another is sale of services or lease of properties. So in this particular business activities, what we need to learn here is how much is the amount that we need to include on our sales or receipts. So we need to learn the tax basis of our business activities. So what are the tax basis of our business activities? For sale of goods or properties, our tax basis is known as your gross selling price. Gross selling price. And what is your gross selling price? The gross selling price is equal to your total sales less returns, allowances, and discounts. Okay, so when we talk about your total sales, this is the sales whether or not it is collected. Whether or not it is collected. And then for your returns, allowances, and discounts, this is only deducted if ever it is taken. So in short, discounts will only be deducted if ever it is taken. So in short, if you have a cash discount, if ever that cash discount is taken, dun mo lang siya i-deduct. How about if that is a trade discount, whether or not there is already a payment, you need to deduct that because that is a trade discount. Okay? But cash discount, it is based on your prompt payment. So long as there is no payment yet, you do not deduct it. Okay? So you will only deduct discount when taken. So for example, so collections, let's say, 300,000 pesos. And then installment sales, 500,000 pesos. And then we have also your sales on account. So we have here collection sales of 300,000, installment sales 500,000, and sales on account 200,000. 200,000. Wag na lang tong collection na sales. Cash sales na lang. Cash sales. Okay. Cash sales 300, installment sales 500, sales on account 200,000. If we need to look on your gross selling price, if that is a seller of goods or properties, what is the gross selling price? That is total sales, less returns, allowances, and discount. For your sales, we include all sales, whether or not collected. So we will include all the three. So our answer here is 1 million pesos for your total sales. Do you have any returns, allowances, or discount? Wala naman. So how much is included? 1 million pesos. So you will tax the 1 million pesos. How about if you are a seller of services or a lessor of properties? If you are a seller of services or a lessor of properties, what is our tax basis? Our tax basis is known as your gross receipts. When we talk about your gross receipts, we talk about your total collections. Okay. Total collections, whether or not performed. So in short, even if you have collected and you did not yet give the service, so long as you collected it, it is included in your gross receipts. So again, on your sale of goods or properties, the gross selling price is your total sales, whether or not collected. In your sale of services or list of properties, what is the amount of your tax basis? That is your gross receipts. We mean total collections. Sale of goods, all sales. Sale of services, only collections, whether or not performed. Okay? So if ever we have the same facts, cash sales of 300, installment sales of 500, sales on account of 200,000. How much should we include on your sales of services or list of properties? Only those collected. So that is your cash sales. So our answer here is 300,000 pesos. Okay? 300,000 pesos. So at the end of this, or after this slide, we should already know if ever we have a business activity that is already considered as a business. So let's have a recap. So if ever we have a business, we need to look at your business activity. So in your business activity, we have only two items of business activity. That is the sale of goods or properties, or your sale of your services or lease of properties. If you are a seller of goods, we have your gross selling price. And your gross selling price is known as your total sales less returns, allowance, and discounts. So for your sales, whether or not collected. How about on your sale of services or list of properties? We have your gross receipts. Under gross receipts, this is known as your collections, whether or not performed. So regardless whether the service is already performed or the lease is already taken into, we still add it in your gross receipts so long as you have collected it. After you know your particular business activity, of course, you need to learn whether that particular business is exempt or taxable. If that is exempt, therefore, there's no business tax. If that is taxable, there is a business tax. And what is the business tax here? If it's taxable, then you can either be taxed at VAT or at percentage tax. VAT only if you meet the VAT threshold or you are VAT registered. Okay? If not, then you are subject to percentage tax. Other items that is subject to percentage tax. So first, you have your non-VAT registered. Another is those specific transactions that is tax at percentage tax. So other percentage tax or OPT. Okay. And aside from paying VAT and percentage tax, you can also pay excise tax because this is considered as an ad valorem tax. Ad valorem tax. So after knowing that you are taxable, you need to know the type of taxpayer. If ever the taxpayer is a sole proprietor, you add all. If that is home office and branch, you add all, meaning including those of branch. If that is considered as a parent and subsidiary, then you need to separate each. Okay? Then after that, you go with your filing of your business tax. Okay? So just an introduction on your business tax.